Welcome to The Weekly Trend, a podcast for navigating the markets through the lens of technical analysis. The Weekly Trend podcast is provided for educational purposes only and does not constitute any professional advice. Listeners should not act upon the information or content without first seeking advice from a registered financial planner.
Welcome back to the Weekly Trend podcast. Today is Friday, August 8th, 2025. S&P 500 currently sitting at 63.77. I'm David Zarling. I'm here with Ian, Don Imus in the morning, McMillan. Do you remember Don Imus?
Oh, man, I was raised on Don Imus.
Yeah?
Yeah. I mean, I don't know if that's... Maybe I shouldn't say that out loud. I'm sure there's like mixed feelings on Don Imus. But yeah, my dad listened to like all 4 hours of that every single day.
Wait, is Don Imus controversial?
Well, I mean, he had the the Rutgers basketball team comment. No, I mean, I think that, Don was pretty, I would say, rough around the edges. I feel like he was assertive before like being assertive was common.
Got it.
Whereas like now, probably a lot of people, more people in the spotlight have a Don Imus type attitude. I know, I always liked him. I didn't really understand a lot of the things that his guests were talking about, like world events.
But your pops had it on?
Oh, yeah, every morning. On the radio, and then he was also on TV.
I didn't realize that. I didn't realize that CBS radio. I didn't realize he was on. There was Imus in the morning until January of 2018. I did not know that. I would lost that.
Yeah, he passed away. I'm trying to remember when he passed away.
2019.
It kind of died down, but like when he was at his peak, man, because I think he may or may not. I don't know enough about the New York City radio scene, but I think him and Stern competed for listeners.
Oh, okay.
Is that right?
I mean, that would make sense.
And they're kind of rivals, maybe. That was always the sense I got. Someone, if I'm totally wrong about that, someone can feel free to DM me and tell me I'm wrong. But I was like him. He did a lot. He did a lot for charity. It's a pretty good dude in my eyes.
Yeah.
I guess.
I vaguely remember him. But I think Howard Stern just lost his show, didn't he?
Oh, that's what I hear now that.
But I thought his show was garbage. I mean,
yeah, definitely not my cup of tea. I think that was a little bit more like a shock jock.
Oh, yeah, shock jock, pretty raunchy.
Where I say like Imus actually had people on, in their respective fields talking about real, like modern day issues.
Yeah.
Sports, politics, whatever it was.
Yeah, they were the podcasters before there was podcasting. They just did it on FM. I don't even know if my kids know what FM or AM is.
Mine won't. I mean, we don't ever listen to the radio in the car.
Yeah.
Just straight to Spotify.
Straight to the Weekly Trend.
Yep.
Sit down, kids. We got to talk stocks. Speaking of that, maybe we should do that.
We should probably do that. Our listeners don't want to hear our thoughts on 90s radio. Yeah.
So was that it? Was that it? That last week? Last week, was that it for seasonality? Is August volatility over after this week? I mean, we rounded pretty hard.
Doubt it. Yeah, I doubt it. Yeah, I just we've gotten back a lot of that, right? It was a pretty good week overall, at least for the major indices. I don't know what else.
I think being able to rebound as well as it did after last week is pretty good. But that overhead resistance is still sitting there. I mean, use something like the S&P, but there's other developments. You look at like NASDAQ 100 versus the S&P going out at new weekly all-time closing highs. It's pretty risk on.
Yeah, I mean, right? We know the ripple effects of NASDAQ being an outperformer. So probably not bad for the S&P either. That's when I go through charts, there's probably not a word for this. Now people will say, oh yeah, well, breadth is getting worse. And that is true. I'm not saying breadth isn't getting worse, but you can also tell. Maybe it's just because we watch more stuff like intraday, or the handful of stuff that I do watch intraday. Not necessarily the candle by candle, not have like 5-minute candles up or anything, but just the prices themselves. feels or continues to feel lethargic. A lot of charts I feel like are continuing to kind of start puttering, like they want to roll over. Now we haven't really got, or at least we haven't got, as a whole, not a big rollover yet. No big whoosh from the market, unless you want to call it, what was that, last Friday? We recovered most of that.
There's nothing, like there's multiple ways to view that, right? Is it lethargic? Is it digestive? Is it a reset? Because I mean, really, when you see like percentage of stocks above a 200-day moving average, like if you're looking at a breadth metric like that, you see in the 80s or 90s.
Yeah.
It moves somewhat like an oscillator, right? That's a mean reverting tool, the 200-day moving average. And so another way to look at it is, are we getting some type of breadth reset? Time will tell. I mean, it would be perfectly normal if stocks were lethargic August and September and we get a breadth reset for the final run, starting in October. That would fit the seasonality we've seen, historically speaking, since the 50s. Yeah. Wouldn't really be all that big of a surprise. But pretty strong move since the Liberation Day tariff tantrums by a lot of stocks, and the fact that they would cool off here, I think pretty healthy. And when you talk about not a lot of rollover, I think maybe one exception to that is Eli Lilly.
Lilly, kind of one of the few remaining strongholds in the healthcare. Of course, you always got your Boston Scientifics and things like that do pretty well. It's probably got more of a tech tilt to it, though. But Lilly, hopefully not joining its friend UNH to the downside, getting continuation today. Not a good look. Weakness for the healthcare sector. Of course, Dave, I think your argument would be you shouldn't have been owning any of this before. Shouldn't have been owning any healthcare anyways.
Right. Yep. We've been in a relative downtrend in healthcare for a while now. You brought up United Healthcare. We also had Pfizer, Moderna, lots of names that were in downtrends and relative downtrends. And here's Eli Lilly matching that. And that's going to hurt the Dow Jones. Bad. The Dow Jones still hasn't made new highs. Lilly's a big part of that. So we'll see. I mean, I think we're still in the window of seasonal weakness for the next 2 months. And the way to use that information is just because that's what's historically happened. If the opposite happens, if we're still strong or consolidating sideways the next 2 months, that's tremendous information on how strong the back half of the year could be.
Well, and so what if we consolidate and then Apple gets strong again?
Yeah. Yes. Yeah. Going to be really, because Apple's been what?
A laggard. Yeah.
A laggard, and at the same price levels it was back in 2021. So you're talking 4 years sideways. Barely anybody talks about it anymore from the standpoint of a stock.
Yeah, lots of negativity around Apple these days from the internet, from random people on the internet. So it could be time.
Could be, and if Apple gets going to be really hard to pull down weighted indices. I mean, that's just math, right? The big get bigger.
Well, and if you look at, I was perusing this morning, right? So on the flip side, we've had Microsoft that's carried us for a while.
Yep.
Not carried us, but the other kind of big stock in the S&P, it has been an outperformer while Apple has underperformed. But if you look at the Microsoft relative chart, it's running into some resistance. So could you see those two
switch spots? Yeah. That's fair.
As far as who's going to outperform over the next, I mean, really, you could have Apple outperform into the end of the year, and it would make total sense.
Yeah, it would definitely carry the bucket for Microsoft if Microsoft cools off. So on the one hand, you have something like Microsoft cooling off, you have Lilly rolling over. On the flip side, you got Apple participating. The momentum factor still alive and well, like when you look across different momentum funds. And that's why I probably should highlight the supporter of this podcast, the Adaptive Select ETF listed on the New York Stock Exchange under ticker ADPV, which helps investors access two of the most prevalent factors in markets, momentum and relative strength. Using proprietary identification methods, the Adaptive Select ETF attempts to own the strongest 25 large cap stocks when the market is in an uptrend. And since not all market environments are the same, Adaptive Select seeks to prevent extended declines by moving to short-term treasury bills and cash during long-term market downtrends. Investors can find out more, including how to invest in ADPV, by visiting adpvetf.com or calling 1-833-880-5200. Investing involves risk, including possible loss of principal, distributed by Quasar Distributors, LLC. And it's not just ADPV that's doing well from a momentum perspective. There's other momentum funds too. The momentum factor's doing well, whether you're looking internationally, whether you're looking US, momentum's alive and well.
Not risk off. I agree with you. I guess part of me is like, when people tell me momentum's doing good, I say, okay, well, that definitely makes sense. But I agree. And right, it's been the same stuff. I was talking to a friend the other day. I mean, it's been the same stuff for 9-10 years now. It's still growth, tech, NASDAQ-y. Now we're kind of into the semiconductors, still pretty hot, but now we're in this like AI and a lot of this like aerospace and defense, which is really turning out to be more like space exploration type themes.
Well, and I would even throw telecom and telecom.
Yeah, so maybe that's the better one. Like you see like an XTL, which was what communications services used to be called. And then I forget what year they changed the telecom sector to communication services, which was fair. I mean, I think it made sense.
2018.
Telecom, 2018. Okay. And telecom really that was always like the classic, like Verizon, AT&T, Ericsson, like late 90s, 2000s cellular telecom. But now telecom's back. And yeah, it's like all this satellite cool stuff outperforming now. Makes sense. I mean, right? I think capital naturally flows towards growth in any type of investing. And all of the offshoots of that typically going to be your most growthy area. So is it shocking that tech has outperformed for a decade? Probably not. It means we're probably innovating.
Well, and it goes back to indice makeup, right? We've talked several times on here about U.S. indices being tilted towards tech, international indices tilted towards value and finance. And then you look back historically on market tops, like major market tops. I'm talking about tops that happen where you have a 50% correction, and it's those leaders then become the leaders to the downside. And we're not seeing that. We're just not seeing, NASDAQ 100 going out to new relative all-time high over the S&P. That's not toppish behavior. Whereas financials and energy were the last market cycle going into 06 to 08. Financials and energy were the largest sectors. It wasn't tech. And that market correction happened and financials stopped participating about in 06. And that, wouldn't you know it, it's the large sector that pulled the market down. I mean, from, 06, even in the beginning of 07, financials rolled over, and that was that. And so my point being, if we're going to get a major cycle top, it's going to be when tech starts to roll over on a relative basis and stop.
I agree. Well, and even, more recently, so I think about COVID, XLK outperformed. They ran to tech.
Yes.
COVID ended up being a nothing burger. And then 2022, they actually got tech to underperform. And we did get a multi-month downtrend. So yeah, I'm with you. You got to have the leaders. And is that, if I look at an XLK versus S&P chart, do I put that in the lethargic category? I mean, kinda.
Wait, which chart?
XLK versus SPX.
Oh, okay. You're just saying that this consolidation.
Yeah.
Well, I mean, we're right into the 1999, 2000 relative highs.
Oof.
Now, we did create that false breakdown in March and April in that relationship. And so you wonder if it's going to push through. You wonder if the shorts have to keep covering. And that's another thing is like we have one down week last week, and the put call ratio jumps, the VIX jumps, premiums jump. You get AAII bears now exceeding bulls on the most recent survey. I mean, 1 week, and so it continues to be that 1 foot out the door market where people are just,
VIX went from 14 to 22 in like 2 days last week. And we get these like little mini resets. Sometimes I wonder if that's all. Well, I mean, we just had 2022, but sometimes I do wonder if that's just what we get is V bottoms instead of
could be
multi.
But I mean, 2022 was a multi-month.
It was.
And the bottoming process was a multi-month. So yeah, there's going to be V bottoms. There's still going to be more protracted corrections. And it's really, if you get another week like we had last week and the put call ratio doesn't jump or the VIX doesn't jump, premiums don't get expensive. Yeah. Like that's when you sit up and take notice and be like, oh, they're not willing to hedge anymore. They don't have 1 foot out the door anymore. That's when topping starts to happen. Otherwise, all this hedging does is end up being future buying fuel when price moves against them. And I think it's hilarious too that like the expert, bank analysts revised their end of year S&P target again. They all ran for the exits during the the tariff announcements. Everybody downward revised. And then now we're back to the original, what we said at the beginning of the year. It goes back to like predictions don't matter. Like you just have to have a plan. And right now with an uptrend on our hands, being above a 200-day, being above prior highs, the trend is intact. Will it stay intact? I have no idea. Is there a scenario where something like the S&P 500 goes and tests its prior high or goes and tests the 200-day moving average 3 or 5% away? Absolutely. That wouldn't necessarily break the trend though.
I ain't trying to do all that. We don't need to be testing 200 days. Maybe 6150.
Well, I think a fair amount of stocks are doing that currently, though. Like we've seen the percentage of stocks above a 200-day and something like the S&P 500 is, there's quite a few stocks now that are near their 200-day. And I think it's interesting that if you actually do the work and look through all the stocks, a lot of those 200-day moving averages are rising, that they're testing or just underneath. There's a possibility here that this breath reset, you see all these stocks respond to their 200-day and move higher. Time will tell. But we still have, if you got Apple doing well, semiconductors doing well, Q's out to new highs versus S&P, you got sentiment that's negative. You have, at the same time, you got risk taking, like pot stocks now. Like they're buying pot stocks.
Psychedelics.
I mean, if that doesn't say risk on.
Yeah, like if you use a YOLO when you're breaking a rate of trend, you're above a 200-day. Now, it's done this before. So
well, and before we hopped on here, we were talking about international. The Nikkei 225 new all-time weekly closing high this week, possibly. The first time since 1989. You got European financials. You talked about a different bunch of international areas that I think you had some pretty good analysis on. You want to talk about that as far as their relative 200 days or their 200-day moving averages? Because international stocks did cool off here for the past few months, but there's some areas that held up well.
Spain, Austria, Greece, and Vietnam, those are gone. I mean, I think those are, I know you hop on those, but Italy did a little bit better, but for sure, Spain, Austria, Greece,
I mean, even European financials as a whole.
Yeah, European financials, South Korea held up well. I haven't checked in on Argentina. It was pretty far ahead though, so it's not very close to its relative 200-day, but that makes more sense. I also understand that's not Europe, but it's still probably the best one out there. I mean, I think it's kind of the best one. Wise might need some work now.
But you have something like the Global 100, right, which holds the largest 100 stocks, both U.S. and international, almost breaking out on a relative basis. So you can see the information piling up that even if we get some consolidation here the next 2 months, using more domestic myopic measurements, that you could see a return to international next 2 months. You could see a return to Apple the next 2 months to hold these markets up. Pretty good information, I would say.
Yeah, there's nothing yet that tells me we're going into a 5-10% correction.
Right. And breadth can be weak.
Right? We just had it.
We did.
I mean, that's what, we don't get a bear. Well, we just had a bear market in 2022. People say we don't get these things. People like to claim we don't get volatility, but we do.
Right. Well, even the correction that took place from January through the middle of April, intra-week, intra-day, that was 21%.
Yeah.
From the end of January into...
I mean, you get like this stuff. We just had a 20% correction. I don't know what the data is. I guess I could call up Ryan Dietrich and ask him to run it. But I mean, what are the chances after getting a 20% correction and we're not in a bear market? It's not like there's like a 2022 where you have now possibility for a bear market, kind of like a relief rally, and then you roll over again. But 20% correction, let's say a 15% correction. How often 3 months later are you getting another 10% plus correction or 5% plus correction? I bet that's pretty rare.
Yeah, I don't know, but I do know Dietrich put out some information on like what we've seen the last few months out of semiconductors, that when we see this type of performance, I mean, it bodes well for semiconductors overall. And if semiconductors are going to continue to lead, I don't know how you can get overly bearish. And yes, go back to do the next 2 months have volatility in a normal bull market? Probably. And that's okay. It's okay to have some of these metrics reset before we move higher. I mean, we should be somewhat appreciative of we didn't have a bullish percent that was sitting in the 80s and then flipped to O's.
Yeah,
that was sitting lower. Same with stocks above a 200-day moving average. Yes, it was divergent going into these levels. Yes, we could see lower stock prices to match some of that divergence. But from a breadth health standpoint, pretty normal.
Agreed. So you just got to sit through it. It's probably going to be weird. Probably going to be wonky. We're above 6150. We're above an upward sloping 200-day moving average. So you have those tailwinds, right? So you've got to err on the side that anything weird that happens will eventually resolve itself to the upside.
And if it doesn't, that's information, right? If we get a consolidation that has borders to it, meaning there's a range that builds out, that if we don't hold that range, okay, that's information. That when a consolidation in an uptrend doesn't break to the upside, that's information. It's like Eli Lilly had a consolidation in an uptrend, broke to the downside. That's information. That stock is broken for the time being. Does it turn into a false breakdown? I have no idea, but it's information that you have to be open-minded about. And a little breath reset, sideways move in markets to digest this move, perfectly normal, helps us get through the Little League World Series and the final run in Major League Baseball and gets us to football.
Well, I'm done with baseball for the year. Major League Baseball.
You're done?
Yeah, I'm done.
So you're biding your time. You're waiting for
I'm saving my mental energy for college football. I cannot waste it on the Braves anymore. The season is done. We have 49 games left. I think I read that today. 49 games left.
I'm not out. Brewers are still in it, man. And they've been hot. Again, uptrend. Wouldn't mind if they consolidate a little bit. Brewer fans get all nervous, but they've been unreal.
Real nice of you.
Yeah.
Real nice of you.
You're welcome.
Talk like that.
You're welcome.
Bragging.
I could send you text
on your baseball team. Oh yeah, they're hot. Your trophy wife at the cocktail party.
Yeah.
Oh yeah, she's hot. We know. We saw.
So I'll send you text updates on how the Brewers are doing. That way you just know what's going on until football starts.
Are you guys what do the betting odds say? Are you favored a pennant?
We are not favored. Yeah, one of the major market teams is favored for the World Series, but the Brewers are right up there now. But I mean, the game's got to be played. You got to get into the postseason. There's a lot of baseball left. A lot can happen in 49 games. Been there before.
Do you feel that small and mid-sized markets like to always mention that about larger markets? Oh, well, yeah, they got those large market teams favored to win. Those guys.
Well, wouldn't it make sense? I mean, that's your
elitist.
Well, no, it's more like large cap, small cap. I mean, it would make sense.
Yeah.
Like if you think about setting gambling lines, there's a lot more money coming out of a large market area to bet on their team.
Yeah.
There's more people betting in LA for their team than there is Milwaukee. So it makes sense. It makes sense from a supply and demand that your line's going to be higher for that LA team. Makes sense.
I think they can do it.
I don't like it when the major markets get to play in the World Series because I feel like that's what Major League Baseball wants.
Do you think is Atlanta considered a major market? It's got to be, right?
I don't know. That's a great question.
Or is
that's a tweener? It's a mid cap.
Because it's not an obvious. It's not a Boston and New York and LA.
Yeah, I guess I would put it maybe in the same line as San Diego, like Atlanta, San Diego, Miami-ish. I mean, Atlanta did spend way more money than Milwaukee, but from a metro area, should I use the internets? I just think it's nice once in a while when your favorite team does well, Ian. So there's
I'm not hating. We got a World Series out of it. If this is it for the Braves and we have to burn it down and start over, we did get one World Series out of it. So
Milwaukee Metro is 1.5 million. Atlanta Metro is 6.5 million. San Diego Metro 3.2. Wouldn't have guessed that. Los Angeles has got to be Los Angeles 13 million. So I like it when the underdogs play well, man, especially when it's my underdog.
Who doesn't love an underdog?
Yeah, exactly. Well, anything else, Ian? I appreciate you being on here again with me. Anything else you want to highlight for our listeners before we?
No, just the trend remains up. Gold. We didn't really talk about gold, did we? No. Yeah, I think it looks good. I think it held up really nicely. Same with gold miners. And then we have the dollar back to rolling over. Went up to 100. Dixie went up to 100, got rejected. So we kind of have that tailwind again. I would say miners over gold, right? Because if we're going to do this, then the higher beta piece is probably going to win out. But yeah. And then silver miners, global silver miners breaking out to 12-year highs this week. I mean, some legit stuff continues to happen in precious metals. So we'll see.
And the dollar can't stay above 99. I mean, You make a great point. I mean, if silver's going to outperform gold, if gold miners are going to outperform gold, that's nothing but quality characteristics for precious metals overall. Great point.
Keep that on your radar. Obviously, gold's been hot. I'm not sitting here saying anything in August 8th, about wow, look at gold. But, part of that's also the relative relationship, and the relative relationship over the last couple of months with the big rally in stocks, brought that down to a pretty attractive level. Yeah, it's likely when we just got the first big push earlier this year. And so it took a break, and do we get another leg higher? I think that this past week was kind of a spot to throw some shekels at that if you do think that there is another run higher over the next few months.
Yeah. Quality things that are out of precious metals and risk-on areas of the market, international, domestic, some breath reset happening here. Things remain healthy. Doesn't mean we don't get a corrective market the next 2 months, but it is very telling how
hard to get in, right? We talked about that, how 18 out of the last 19 sessions have opened higher.
Yeah. And it's hard to get in, right? They gap it up, and if they sell it from that point, that means you got to
sell it off, and then
that means you're sitting overnight with a negative position. It's difficult. And you just have 1 foot out the door by these investors, buying puts, hedging, bear surveys high.
That
we see that type of stuff.
That amazes me that we are bearish.
When you have headlines like Moody's is warning of a recession, I mean, and that
I mean,
many
I'm
times
not
we
a
see them
macro
wrong.
person, but I'm pretty sure we're not that close to recession. I mean, didn't we just have like 3% GDP? Something
Yeah,
like that?
well, it'll be a revised a year later.
Yeah, it'll be revised.
Yeah, price moves first. It's kind of like we had positive GDP numbers during the 22-23 correction. You get into 24, and all of a sudden they were revising the GDP numbers for 22 and 23 downward into recession territory. So yeah, we had a recession, but the market was already pricing it in.
Yeah.
Markets are a future discounting mechanism.
And why can't you just avoid it? Like, just do the trend, man. Just do the trend.
Yep.
They'll tell you whether you should be in or not.
Correct. The market knows more than you, me, and our listeners. It's our truth.
Best thing I ever did was just relent to the trend.
Yep. Let the trend be your friend.
I got better things to do than try to figure out GDP or if we're going to be in recession or not.
Manipulated labor statistics.
Especially going into football season, I do not have time to worry about macroeconomics.
Right. Well, good stuff, Ian. Appreciate it. We thank everybody for listening. Make sure you share this with your friends. Give us a high ranking on your platform of choice. That helps us get the word out and is a compliment to us, and we appreciate it.
Have a great weekend.